ASX 200 closing bell, 16th of March 2026. At the start of the trading week on Monday, the S&P ASX 200 closed at 8,583.40, declining 33.70 points or 0.39% for the session. The local market began the week on a softer note as investors absorbed global news. Investors continued to monitor ongoing geopolitical developments in the Middle East. Market sentiment remained cautious as elevated energy prices and geopolitical uncertainty contributed to concerns around inflation and global economic stability, casting a shadow over the session's open today. This cautious tone followed a mixed lead from Wall Street and a relatively soft start for our Asia-Pacific neighbors. Domestic traders are increasingly looking for direction from international markets as they navigate a complex web of rising rates and volatile commodity prices. Over the past 5 trading days, the index has remained broadly unchanged, reflecting a lack of conviction from buyers. However, looking back since the start of the year, the ASX 200 is down roughly 1.50%. This year-to-date performance underscores the headwinds facing the local market. From a technical perspective, the index continues to trade above a key support area near 8,383.2. This level has served as a critical safety net in recent weeks, and market participants are watching it closely to see if it holds during this period of volatility. Near-term resistance is observed around 8,140.3, which has capped recent attempts to move higher. Currently, the RSI sits at 35.39, indicating neutral to bearish momentum. These metrics are vital for assessing the current market structure and potential breakout points. Materials was the weakest sector today, declining 2.22%. Iron ore producers faced pressure after reports that China's state-backed trading group may ease restrictions on BHP exports. As a result, BHP Group shares fell 1.22%, dragging the broader sector down with it. South 32 recorded a sharp decline of 5.67% during the session. The company announced that its Mozal aluminium smelter would undergo maintenance, citing significant power supply concerns that have impacted production expectations in the near term. In contrast, Lynas Rare Earths was a relative outperformer, rising 1.40%. The company secured a new supply agreement in the United States that includes critical pricing floor arrangements, providing a much-needed level of stability for their rare earths portfolio. On the upside, consumer staples was the strongest performing sector, rising 0.81%. This defensive shift shows investors rotating into more stable assets as volatility in the mining and tech sectors continues to drive market-wide caution. In the energy sector, stocks generally held their gains despite comments from the International Energy Agency regarding potential oil reserve releases in Asia. However, coal producers pared back some of their recent gains as the session drew to a close. Corporate developments also caught the market's eye. Perpetual Limited announced plans to sell its wealth management division to Bain Capital for roughly $500 million. Shares rose 1.79% following the announcement, reflecting positive investor sentiment. Meanwhile, Telix Pharmaceuticals declined 2.75% after confirming it intends to resubmit a brain cancer drug application to the U.S. regulator. The delay in the approval process has led to some near-term uncertainty in the biotech space today. Among individual stocks, Reliance Worldwide and Karoon Energy were among the strongest performers today, rising 6.85% and 4.62% respectively. Both stocks saw significant buying interest throughout the session as investors looked for growth opportunities. Conversely, IperionX and Deep Yellow recorded the largest declines of the session. IperionX fell a staggering 22.24%, while Deep Yellow dropped 11.25%, reflecting broader volatility in the smaller cap and speculative mining sectors during the session. Looking ahead, all eyes are on the upcoming interest rate decision from the RBA. Market expectations currently suggest the possibility of the cash rate being lifted toward 4.10% as policymakers continue to assess inflation pressures, including those linked to higher energy costs. As we navigate these volatile periods, remember that market corrections often provide long-term opportunities for those with a disciplined strategy and a clear understanding of support and resistance levels. Stay focused on your goals, maintain your composure, and manage risk carefully. If you found this wrap useful, please like the video, subscribe to the channel, and turn on notifications for regular updates. Share your watch list in the comments below. Until next time, stay focused on the charts.
Disclaimer: the information contained in this publication is general in nature and has been prepared without taking into account your objectives, financial situation, or needs. It is provided by Titan Securities, holder of Australian Financial Services, license number 307040. It is not intended to constitute personal financial advice. Investing and trading involve risk, and past performance is not a reliable indicator of future performance. You should consider your own objectives, financial situation, and needs before acting on any information contained herein. You should also read our financial services guide and, where relevant, the product disclosure statement and target market determination issued by the product provider. These documents are available upon request. Titan Securities accepts no liability for any loss or damage arising from reliance on this information.